Shared Interests hosted a symposium seeking to explore opportunities to enhance local capital markets through partial credit guarantees in Southern Africa. The symposium highlighted the challenges faced by small, micro and medium enterprises in the region. In South Africa, 60% of the workforce is SMMEs, contributing 34% of gross domestic product. However, 85% actually operate informally and a good majority lack access to financial services. To tell us why, Dorcas Onyango is a Global Director of Programs at Shared Interests. She joins us now. A very good evening to you and thank you so much for speaking to us. Perhaps let's just first start with your organization. Tell us a little bit more about what you do and how you're involved with SMMEs.
Thank you and good evening to all the viewers. Shared Interest is a not-for-profit organization that is working to expand financial inclusion for SMEs in South Africa and countries bordering South Africa. We do so by recognizing that SMEs many times lack the assets that they can present as collateral to borrow capital that they need to set up, to grow, or to build resilience. And therefore, we provide them with what we call partial credit guarantees. And this is some sort of insurance that we give to banks or other lenders who are working with SMEs, that if they lend more to SMEs, should there be a default, we would cover the residual part of the loan that would not have been paid.
And a lot of this has to do with credit worthiness. So if we're saying 85% actually operate informally, and that's a good majority of them, and therefore they lack access to financial services and most importantly, education. So how do you hope to explore opportunities to enhance the local capital markets through partial credit guarantees with these conditions in Southern Africa?
This is one of the reasons why we convened the symposium that we convened last year. While we are prepared to guarantee lenders of small business, we fully recognize that small businesses are facing a myriad of challenges. And therefore, we want to work with other stakeholders to deepen our specialist support in a number of ways. One, we want to share information. We are promoting and advocating that small businesses are provided with financial education. We are also promoting and advocating the fact that there needs to be coordination between ourselves and other players in the financial inclusion ecosystem. So in addition to ourselves providing capacity building to small businesses, we partner with other organizations that can bring other support services, particularly to organizations that are running sustainable businesses. Their potential to create jobs, and all they lack is access to knowledge, access to information, and access to those finances.
So, as you say, the organizations that gathered, they shared experiences and thoughts over partial credit guarantees and looking at some of the lending trends. With only 26% of banks lending in South Africa and seeking loans, and that compares to other countries such as Turkey with 36%, you say, Brazil and China. So are you able to tell us what came out of it and what really, accounts for the differences? Obviously, the levels of development and the economies differ, but in what significant ways?
So South Africa is the biggest economy in South Africa, and in many ways across government, NGOs, private sector, there's a lot that's already happening to try and support small businesses and mainstream them into the formal economy, which makes it a lot easier for them to access available capital. Still, there is a $300 million gap for these small businesses, and that's significant. So instruments such as the partial credit guarantees come to unlock more capital locally, because locally is where small businesses are borrowing. But the local market is quite fragmented. In addition to banks, there are several other institutions that are serving small businesses. So we invited them as well. And we had a conversation, bringing all our expertise and experiences together to talk about we need more coordination, we need more collaboration, we need to simplify the processes, for SMEs, we need to provide them with education. There was a conversation around how we can formalize those who are willing and able to be formalized, because that then puts them in the radar of different lenders, be they banks or non-bank institutions. There has to be a continued effort to mainstream women. Majority of these businesses that you talk about are women-owned. Women obviously face specific challenges when it comes to accessing finance or other SME empowerment interventions. And so the conversation came up with a whole number of strategies that really you can summarize as providing SMEs with a bouquet of support, not just financial inclusion.
So I want to go a little bit deeply into the bouquet of suggestions, particularly around partial credit guarantees, because I think you said what came out of it is that they can better promote risk management loan portfolios. But these panelists who discuss the purpose and mechanics of partial credit guarantees and the guarantee fees and the barriers to their adoption, what did they come up with in terms of moving forward if one is being innovative in terms of their strategies of financial inclusion with specific enhancements in mind?
Thank God within our symposium as shared interest, we also invited SMEs. So SMEs have said that one solution is for us, as we develop innovative products to expand their financial inclusion, we should first and foremost talk to them to inform what specific financial issues they have and how that they want to be addressed. So that's one of the things that came out of this is more of these symposiums will be required to foster more conversations that can shape the support, so that the support is SME driven as opposed to just providing innovation and SMEs don't have a voice.
And just finally on the issue of climate. Ms. Dorcas, are you still with us?
I was going to talk about digitization.
Okay, please go ahead.
I am with you.
No, go ahead.
Sorry about that. One of the important outcomes of this is the importance to begin to digitize, and this comes across both the lenders and the borrowers. The more we digitize, the more we can collect and share information and utilize that information to make lending processes cheaper, more efficient, and transparent for SMEs.
Okay, all right. Unfortunately, we have run out of time. I was going to ask about what the conversation. Okay, well, I believe I'm able to ask you one last question. It's around climate change. It's a conversation we can't, escape. As we speak at this particular moment in various provinces of South Africa, we are being confronted by this. This will obviously impact on small businesses who weren't really anticipating, let's say, the heat wave, for instance, and the solutions that they could implement quickly on their feet. And if it's sustainable, what came out around that, the reality of climate change and how we are clearly not ready for it?
Shared interest and its stakeholders talked about the resilience of small businesses, and climate change is obviously a driving factor that impacts small businesses' resilience. Right now, we know that only 33% of any small businesses in South Africa may be insured. And this is one of the recommendations that we talked about that would be important. It's important that if the South African economy is so dependent on small businesses, some form of tailored insurance that can build their resilience when they face the impacts of climate change would help them. And that would also increase their credit worthiness. They can access finance, and therefore they can finance their own operations, innovation, and growth despite climate change.
All right, thank you so much for speaking to us. Much appreciated. That there is Dorcas Onyango. She's Director of Programs at this shared interest outfit that hosted that symposium.